Hello, everybody. It's Saturday after the close of the markets yesterday. Yet another thing hit us, and that was the downgrade of the United States in terms of their credit rating. We're going to break that down, what it all means, and why really. Is it really something? Should we be worried? Should we sell? Or should we wait? And it's also no coincidence that our bags could be the solution to this problem. Nothing is by chance. Let's get into the story, and thank you to the mods in the chat as well for being here. This is called Debt. We Got a Problem. And it's very serious. About once a year, I make a death spiral video. And it's about that time of year as well to refresh ourselves on how bad the situation is. And we have a whole bunch of people watching live. So let's get into it. And don't forget to like and subscribe. We have well-rounded stuff here that'll make you smarter. And yes, even though I will be talking about debt, it is a Bitcoin story with a twist. In fact, last time I did this, I discovered one way out. Now I've got three ways out of this problem. And of course, save yourselves, just like the governments need to save themselves too, is very important. First of all, let me try to put this in the bottom right so you can see. Moody's downgrades United States credit rating for the first time in history from AAA to AAA1, U.S. federal debt burden to hit 134% of GDP by 2035. No, it's actually going to get there a lot sooner. We'll talk about that too. But this is all something that shouldn't actually be a surprise. But there's more. And we'll get through some of the macro stuff, kind of update on debt and how it is spiraling out of control. By the way, Bitcoin on this news only fell 0.3%. It's holding up because Bitcoin loves a crisis, as I always say. Now, because of this downgrade, AAA to AAA1, US is now behind these countries: Germany, Canada, Australia, Denmark, Luxembourg, Netherlands, Switzerland, Norway, Sweden, and Singapore. So if you are from any of those countries, say hi. You're better than the US today, at least from a credit rating perspective, which is important. Now, the other interesting news too, shout out to Holger. He says, oh, good news from Germany. And Germany hasn't had any good news in a long time. But now Germany has a top tier credit score, and it's one of the last key competitive advantages helping the country secure some of the lowest borrowing costs in the world. Remember, the higher the risk, the higher the interest you have to pay on your debt. Very, very important. We'll get to that as to why that's actually a problem right now and why QE is happening secretly. But as the EU moves further towards a shared debt model, Germany could be at risk. And yes, I think many of these countries will slide down to where the US is. Now, to put things in perspective as well, the scorecard, you've got three different firms that do credit ratings. You got Moody's, S&P, Fitch, etc. You'll see the United States from this chart. If I can zoom into it and see it myself, you've got already the fact that two other firms, S&P and Fitch, have already downgraded the US. So it should come as no surprise that it happened again. And we'll get into the numbers. And what this downgrade actually looks like, shout out to Gabasi. You can see their chart here. So there's a whole bunch of different ratings that start from, what would they be? Hang on, I got to zoom in. From AAA, which is obviously the best, all the way down to D. It's kind of like being back in school. So, AAA, USA was an honor student, and it got dinged. It got dinged multiple times. Pink is S&P. They dinged them first back in 2009. And then Fitch dinged them during 2021 or so. And then Moody's just did it today. So they're all kind of doing the same thing. But what's important about this is now we have the history to see what happens after such a downgrade and find out if it's a big deal or not. Also, what's the problem? Remember this? This is one I shared last time. And they raised the debt ceiling back in 2023, or they didn't raise it. They suspended a debt ceiling so people could just spend like crazy. And 18 months ago, the debt was 33 trillion on the nose. We broke 33 trillion for the first time. And I remember, because I remember numbers, and that was had a nice ring to it, unless, of course, you owe that debt. Now, this is the problem. This reminds me of a glacier. It shows you the US deficit, the little dark blue piece on the top of the wave, and then the revenue, the tax revenue the country takes in, and then the debt. And the debt under different administrations. And of course, it's going exponential, because that's what happens in the world. Everything goes exponential. and you want to be in exponential assets. But you also don't want to be in assets that are tied to this exponential increase in debt, which is fiat, because that's the kiss of death right there. The point is, you cannot escape this matrix, or maybe you can. That's what we're going to try and address today. Also, some people think it was a hit piece. This is from Stephen Moore. He says, they downgraded America's credit rating from AAA under Trump, but the problem existed long before that. The previous administration spent $5 trillion and sent inflation to 9 to 12%. No problem at all. This new guy has only been in office for 12, 16 weeks, and they did that. But at the same time, the other rating agencies did it during the Biden administration, so I don't know if it's a hit piece, but the timing, some people may find, is a little bit suspicious. Especially with all of the other stuff that's happening behind the scenes. And again, if it's political or not, I don't care. This is about protecting ourselves and securing our bags. So let's get into some really scary numbers. 18 months ago, I did this video. Debt was $33 trillion. 33. 33. The debt per taxpayer was $255,000. Fast forward to today. The debt is nearly $37 trillion. 18 months, 4 trillion added. That's $222 billion a month added. And the debt per taxpayer up to $323,000. Now, a lot of people ask about DOGE. I'll hide myself for a second. DOGE has saved about $441 billion, call it $500 billion. It's a spit in the bucket. The pace at which the debt is increasing, DOGE will not fix that. Despite the great efforts of DOGE, and it saved $440 billion, and the future impact will save a lot more as well. But it's not going to stop the $222 billion a month train. Okay, so don't pin your hopes to DOGE saving the world. It does help. It does stop bad things from happening, but it's not going to help us. And remember, the interest on debt is now over $1 trillion, and the debt to GDP is 133.34%. Everybody. Remember, they said it'll be 135%. Well, I think we're pretty much there anyway. And also, what's very important, if the GDP shrinks and the debt continues to grow, this thing also goes exponential, this debt to GDP ratio, which is critical. And we'll get to that in a minute. Also, another beautiful view of where we are in terms of this whole spiral. Shout out to New Money, had this beautiful little chart. This is the average interest on debt. Now, if we go back to 2020, it was $523 billion. Now, in 2024, it was $1.13 trillion. So far, year to date, we've spent $500 million on debt, and we have $9.2 trillion rotating into a much higher interest rate, which is a huge problem. So that basically, I can estimate right now for 2025, the interest in debt will be way more than $1.13 trillion, unless rates come down real fast. So sorry about this little macro lesson, but it's important to know for you and your families. And another, I don't know if this is good news or bad news. Well, it's a bit of both, to be honest. But the Federal Reserve is reportedly conducting stealth quantitative easing. They quietly bought $43.6 billion in U.S. Treasuries, including $9 billion in 30-year bonds over the last 4 days. And they didn't say anything. They didn't say a word to anybody. Massive amount, because nobody wants these treasuries. And that's why they have to keep on increasing the long end rate to sell them, because nobody's taking on the risk at 3.5%, 4.5%. They want 5% for this stuff because they all know fiat is going to zero. So the good news is stealth QE is back. That means there'll be more money printing. That means there'll be more debasement. That means hard assets will go up. But also at the same time, what's going on? So the Chinese are hoarding gold like crazy. They are dumping their treasuries. And smart people around the world, like people in Brazil now, are looking at Bitcoin. And they're not looking at the US dollar anymore. And we see that with all sorts of signs all across the board. So this type of stuff, even though it's scary for the dollar, it's good for Bitcoin. Now, speaking of why we have a problem, this is China's treasury sell-off. UK, shout out to the UK people there, has overtaken China as the second largest holder of US treasuries after Japan. Japan are still up there. And of course, Japan have their own fiat problems, which we don't need to talk about. But the Chinese are dumping treasuries hand over fist, and they're buying gold instead, which has actually turned out to be a good trade. But basically, the Chinese are pumping the entire gold market. And I ask myself, what happens when the Chinese figure out there's a better gold out there? Imagine what will happen to the Bitcoin price. It's going to be extraordinary. But we'll get back to that in a minute, too. Moving on with the story, the debt is growing far faster than the economy. And why does this matter? Because this chart is alarming, because it shows debt growing much faster than the output of the nation. Okay. And also money supply at the same time is also growing, which is debasing everything. But just focus on that red line here. US national debt has been growing faster than GDP for 10 years. Okay. And of course, US national debt is now, if you look at the debt over GDP ratio on this chart, oh, I'm in the way of the number on the right. Excuse me, disappear again. It's 0.82. Okay. Debt over GDP. GDP is smaller than debt. And that is way beyond the point of no return. And as of 18 months ago, national debt, again, I crossed 33 trillion. And that's 124 times as large as it was 70 years ago. So debt is just going to the moon. No ifs, ands, or buts, and so is money. And where is our destination for this debt? Way north of $200 trillion. Okay? Imagine $200 trillion in debt. There will be less taxpayers in the future as well because of all the change happening and disruption. Who's going to pay all this? That's the question. Now, another chart that shouts out, screams emergency, is these are the 30-year bond yields across the planet. Netherlands, Japan, US, Great Britain, France, Europe, Spain, Germany, Canada, Belgium, Austria, Italy, all saying the same thing, everybody. Nobody wants fiat. Nobody. And if they have to buy a bond, they want a lot of return for that bond because they know fiat's going to zero. And this is going to accelerate. Nobody's going to be touching these things in very short order when they wake up and do their research or watch this video. And $1 trillion, people talk about $1 trillion like it's nothing. Okay. US government has added, since I did this video, how many trillion in the past 18 months? It's $4 trillion in 18 months. $4 trillion in 18 months. That little guy on the left is standing beside $4 trillion. It's just insane. This paper stuff called fiat money is completely worthless and printed out of thin air. And if that doesn't alarm you, I don't know. And I did talk about the tipping point. Historically, the 77% debt to GDP tipping point is there, and we are beyond the point of no return. There's no coming back at all. And 36 trillion, which is nearly 37 trillion right now, visualized. I need to update this with another few walls of trillion dollar bills at the back. Is monstrous. That stack of cash is $36 trillion. It would take an army of millions of people to even count that. It would take years. Anyway, moving on. And how the debt spiral accelerates. The problem is the deficit. The deficit is growing. The deficit is going to explode when they refinance that 9.2 trillion at a much higher rate. And that's it. I mean, the amount of interest far exceeds the defense budget and all the other budgets out there. If they weren't paying interest on debt, you'd be able to rebuild every hospital, every school in the country and have a whole lot more money saved over. You wouldn't even need to charge people taxes. Anyway, moving on. In a little bit of Bitcoin perspective here and global perspective, global interest on debt is $22 trillion. Global GDP is about 101 trillion. Okay. So remember, global debt is about 310 trillion today. GDP, 101 trillion. So the debt for the planet far exceeds the product of the planet. That's a problem. Like, just imagine you are a household and you had, say, 101 trillion of product salary every year, but you owe 310 trillion and you have to pay 22 trillion in servicing of that debt. It's crazy. 80% of what you make before taxes goes to pay interest. Anyway, in Bitcoin perspective, I thought this was kind of interesting. If you imagine global debt, 320 trillion, interest is 22 trillion, the annual interest is 220 million Bitcoin. That's kind of fun to think about. 220 million Bitcoin in interest. And that's a lot more than the amount of Bitcoin that exists. Anyhow, it's crazy. And people always get excited. It's okay, my house has gone up in value. And Saifedean reminds us, American houses did not magically become 6x more valuable. American money became 6x less valuable. That's the way you need to think. And that's why you also need to own hard assets, but preferably exponential ones too. So, and sadly, it's also not just the government that has a debt problem. Retail investors do as well, retail people out there. And this trend is very alarming. This is the shocking statistic of the day from Kobasi. The share of the lowest income Americans aged 20 to 64 have credit card accounts with debt that is 90 plus days past due. Okay. This says Q1 2025. That's the highest in 22 years. And this percentage has risen by an alarming 6 points over the last 3 years. It's going ballistic. I think people are just giving up and just putting everything on the credit card. And that's going to hurt the banks when the piper needs to be paid, as they say. Anyway, there is some good news happening. Let's get into the good news now. And sorry about setting the stage there, but it's important that you are all aware of exactly what a dire situation the planet is in, not just the US. But here, the BlackRock Bitcoin ETF has done nothing but stack every single day for the past month. It's incredible. Yesterday, 130 million. The day before, 410 million. The day before that, 233 million, etc. And we discovered in yesterday's video, the people that are buying this stuff, it's not Joe Schmo and Susan Q down the road. No, it's sovereign wealth funds and other big nations buying this IBIT BlackRock ETF. Absolutely crazy. So people know the alarm bells are going off and they are flooding to Bitcoin to try and save themselves. Now, another bullish sign for Bitcoin too is shout out to this Ash Crypto shared this just today. Some crypto whale opened a $300 million 40x long position on Bitcoin, and the liquidation price is $95,000. So Bitcoin's about 103,200 as we speak. The liquidation level is quite low. They got a lot of collateral on there to make sure it is low. But this tells me Bitcoin's not going to $95,000 with this latest crisis, with this huge amount of action. Okay, so $300 million 40x trade. Anybody here in the audience made that trade? So anyway, it's again, this is a crazy trade, but the perspective is on this. Does somebody know something? Are they a whale or are they an insider with some insider knowledge? And again, as I said, people like Saylor and others have been smiling since November. So something's going on behind the scenes. And shout out to Carl Menger too. 1 kilogram of gold is now equal to 1 Bitcoin. I was going to show a chart of how much one Bitcoin was worth in gold a couple of years ago. It was worth like an ounce. An ounce in 2017. It was worth an ounce. It was worth 2 ounces, I think, in March 2020, etc. Now, 1 kilogram of gold, which I have no idea how many ounces are in a kilogram, but probably a lot, is now worth 1 Bitcoin. So congratulations if you own Bitcoin over gold. And I know gold has had a very good run over the past couple of months, thanks to China buying it all. But still, Bitcoin smokes it on every metric over every time frame. Now, speaking of gold too, and this is also exciting for Bitcoin people. I covered this briefly yesterday, but CERN's Large Hadron Collider have successfully transformed lead into gold atoms. And we saw what happened to the price of diamonds after humans could actually manufacture diamonds as well. So we'll see if they can make this thing scale. And if that does, the price of gold will plummet. And those that hold gold will seek a safe haven. Guess what that's going to be? Yep, digital gold 2.0. And I wonder, will Xi figure that out too? Shout out to everybody in China. We know we have one person here at least from Beijing. But China will soon figure out there is a better way to hedge. Just think about this for a second, because this is so important. The Chinese are trying to hedge the depreciation of their treasuries and bills by accumulating gold and trying to switch the currency of transaction to the digital yuan or renminbi or whatever it's called. However, none of that is working and the dollar still dominates. So eventually, the logistics of dealing with gold as collateral between central banks will become far too complex, too laborious, too costly, too inefficient, too risky, etc. They will have to find something better, cheaper, faster, and far more convenient and auditable. Drop a comment below if you know what that is. I think he has it in his left hand. Anywho, the good news, this is what I call 3 ways out. Last time I did this video, there was 1 way out. Now I've got 3. And I'm hoping that governments and nations around the world know how important this is. And it's no coincidence 2 of these 3 ways are very profound for us. That's why I make these videos. Thank you all for coming. I never ask for likes or subscribes, but if you could tickle it, please, because people need to hear this stuff. This is so important, okay? Very important lessons. This is called 3 ways out. Let's dig into the first one. Way number 1, print more money to service debt. Yes, they're doing that already. Stealth QE, 40 billion just this last 4 days. Debase the currency, reducing debt. Yes, they're going to drop the value of the dollar, and all fiats around the world will drop anyway. And they need to keep debt servicing costs down. The interest rates need to fall. Hello, Jerome Powell. You got to bring those puppies down. Or if it's a personal vendetta, I don't know. But that's going to completely crush deficits, which will require more printing, which will drive more inflation, etc. But they do need to keep inflation high, which devalues the currency, reducing the debt. See how it's all kind of a self-fulfilling prophecy almost? And they need to keep GDP high to keep tax receipts high to service the debt. If the government starts to slow, we are in big doo-doo, ladies and gentlemen. So that's way number 1, which is kind of multifaceted, circular, etc. Let's get into way number 2. U.S. Strategic Bitcoin Reserve can help reduce the debt. Super Soul Man, thank you for coming. This is so fascinating. This is one of Lord Saylor's slides, which I cribbed to put in here. This is the Lummis bill of buying 1.2 million Bitcoin. The government has 200,000. They need to buy 1 million more. And that could be worth 16 trillion. So if you imagine the debt today is, say, 36, 37 trillion, that can help reduce the debt burden, okay, over time. And we're going out to 2045, which is not that far away. It's 25 years away. It'll take them a couple of years to stack that bag, but we'll see if they can do that. Now, also, if they can go what Saylor calls double max, acquire 2.2 million Bitcoin, so adding another million Bitcoin to the ante, that would be worth 34 trillion, which would, if the debt didn't grow, of course it will, but if it didn't, that would cover the debt bill, which means they could sell the Bitcoin and, of course, pay off the debt. This is just, of course, it's not going to happen like that, but it could. Half Viking, thank you for coming. And finally, this is the chart. We see all the different options here. Now, if the debt does completely explode to 106 trillion, and they somehow found a way to have 5.5 million Bitcoin, they could pay off 106 trillion. Madness. Same thing with triple max, 4.2 million Bitcoin. Double max, 2.2 million Bitcoin. Lummis bill, 1.2 million Bitcoin. Which version are you? Are you a double max, triple max? It's always fun to think about that stuff. So anyway, that is the second option. If a government, a nation can print their own fiat and stack Bitcoin, they can get themselves out of debt. And the third way is accelerate GDP. A bit of a wild card. If the GDP grows faster than the debt, they can use revenue from that GDP growth through taxes, etc., and other fees to pay off the debt. And a lot of people believe humanoid robots can dramatically accelerate GDP. So a simple example of that is a robot taxi that you buy for $30,000 or $15,000 can make you $50,000 a year. That's an example of you making $15,000 investment and getting 50 grand back. That's blowing up the GDP, everybody. That's the stuff that these robots on wheels and humanoid robots can actually do. And this could be what the government needs. And I do hope that the current administration is listening to some of the wise people advising them what to do. And also, one of the things that we're working on here, shout out to Sanjay too, is figuring out what's going to happen in the world. So I talk a lot about universal basic income and debt and GDP growth and how all of this will work together. It's very complex. US national debt, 37 trillion. To pay it off, this is crazy here. To pay it off, the US government needs $1.5 trillion per year surplus, okay? And a diversion of that to go straight to pay off the debt by 2050. We have $2 trillion plus deficits. So the swing needs to go from minus 2 trillion plus, call it 2.2, 2.1, 2.5, whatever, to 1.5. That's a $4 trillion swing. And then a huge chunk of that needs to go to paying off the debt. But there's a kicker which makes things even worse, because as these robots come in, there won't be as many jobs, perhaps, for people to do, and therefore humans will need a $60,000 per person universal basic income to stop complete political unrest. This is coming. There are many nations across the world where half of the population are dependent on payouts from the government. We are beyond the tipping point in many places, and I believe it's only going to get worse. So you need to have your life raft, okay? I've just shared 2 flavors that you need to have in order to not be dependent on universal basic income in the future. And by the way, 60,000 universal basic income sounds like a lot. It's like, I'll take that. But remember, fiat is going down. So in 5 or 6 years, 60 grand might buy you $30,000 worth of stuff or even less. So please bear that in mind. And sorry for the cold blanket, cold shower. But this is the hard truth. Debt is unsustainable. Debt will accelerate. DOGE will not stop the acceleration. Global debt is a serious risk to the global economy unless they can fix GDP with robots or pay off debt with Bitcoin reserves. Or there's going to be a big reset. Okay? Now, back to the question that everybody's asking about as well, which is the inspiration for this video. Why the Moody downgrade of the US is not a big deal. Because we've seen this happen in 2011. S&P lowered the US credit rating from AAA to A+. It caused huge panic, everybody freaking out, going mad. But nothing really happened. Market bounced back immediately. And US Treasuries also wouldn't count as a valid collateral. And the people that owe this already know there's a debt problem. It's no surprise. Like these rating companies, I don't even know why they exist, to be honest. They had misrated so many companies for the longest time, both up and down, because of denial or corruption or I'm not sure what, allegedly, who knows. But in August 2023 as well, Fitch dropped the US to AA+. This is not our second rodeo. This is now our third rodeo, ladies and gentlemen. And notice the timing at the close of market on Fridays. And the bond market barely reacted because of those updated rules that happened in the previous situations. US was already considered AA+ by 2 of the 3 agencies. So there's no change, no surprise. And Moody's now has followed suit. And again, nothing will change. It's a nothing burger. Yes, futures are down a little bit. NASDAQ fell about 1% in the aftermarket. But I do believe we're going to make it out alive. And finally, conclusion is also different. I used to say for years, all roads lead to Bitcoin. Now all roads lead to that double whammy. Bitcoin and humanoid robots, and there will be a clear leader in who that is. So everybody, hope you enjoyed the show. Sorry for being a little bit morose and dark about this debt stuff, but we do have a way out. Make sure you have your life raft. Thank you again to Team Tesla, Sean Donnelly, American Beijinger, and the whole crew here, and Super Soul Man, Vagabond, Half Viking, and everybody else. See you all tomorrow for the Q&A. Thank you all for coming. Bye.